Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein is going to take us through the charts, and here to take us through the trades is Mike Shorr, Director of Trading Education at Prosper Trading Academy. Great to see you both. Mike, let's start a little bit zoomed out here. Let's talk some markets in general to set things up. Today looking a little bit more like last week, but it's been a pretty public tug of war, I would say, between bears and bulls thus far in 2024. What do you make of it?
Yeah, I think for today's data, I think we kind of need to be blown away to get that next leg up. So it's not really all that surprising, given that with the Apple downgrade and not exactly exciting numbers for us as far as inflation coming off. It doesn't surprise me that we are going to come off a little bit. I don't think that it's a sell everything sort of moment. So I'm still in the buy the dip sort of scenario here. And, we'll see. We got PPI tomorrow. That'll be interesting to see if we get if we do get a soft PPI number. I think that they'll kick out whatever the CPI from today was.
And along those lines, are you using that same mindset when taking a look at your first trade in Microchip Technology, MCHP, for those not familiar with the stock? Mike, take us through the first trade that you're looking at.
Yeah, so this one, given the data that we had this morning, I was gonna wait for a breakout. I wasn't just gonna say, let's just buy this on the open. So I'm looking for a breakout on the hourly channel. Right now, it's sitting right there at its 50-day moving average. So it's off a little bit today, which has been support for the last week and a half. But I would wait for the market to do kind of the hard work for us. My breakout price there is 86.60, and then I'm looking at the 90.95 call spread going out to regular Feb, and you can pay $1.25 for that, and so you're going to get 3-1 on that sort of setup.
Yeah, 3-1 on the payoff. You see that there. Max profit 375, max loss 125. A little bit of time here as well.
Yeah, buy yourself a little bit of time. It doesn't look like that it's not a binary type of stock, but given especially the other runs in your big chips, kind of your subsector chips like ON and Unity and things like that, MCHP gets thrown into that silo for me. So I'm gonna wait and wait for them to catch on with everything else, and if it doesn't, well then it's a no trade for me.
Yeah, and so with you, real quick then, before we get the technicals on this, I do see it contends with that earnings date slated for February 1st. You're using that potentially as a catalyst that could actually get us above those strikes and, get us into that kind of, that onto the dance floor for that one?
Yeah, and I believe 220, I thought I saw earnings were. So we will be expired or out of it by then. I could have pulled a bad date, but I had 220 on my machine.
Yeah, we'll look into that, but I'll see if I can get a confirmed date. But because I'm seeing the first, we'll see if one or the other is the date. But no worries either way. Ben, talk to us a little bit about the chart and what we're seeing in this name. Semiconductors have been so much a focus in 2023 and now 2024.
Yeah, I'd expect that to continue to be the case too. Tech in general, for that matter, Alex. But Mike's not the only one that's looking for a breakout in the stock. We've been consolidating. We're in a bullish pattern here, so it would be supportive of the trend that we've seen on multiple time frames. Let's just begin with the more granular, the 5-minute candle chart, and you can see as you look at some of the price activity over the last few days, a couple well-defined areas of consolidation. You can also see that vertical separation that I look for. So really well-defined 2 phases of price development. You get the big move up. You get a horizontal overlapping rotational price activity around 82.50, and then again a high conviction trade higher into the range we've been in. We'll call it 86.60 down to this $84 level. So just kind of testing a lower extreme range that we established yesterday into today, but mostly still hanging in there right around 85.50. Take a step back from the 5-minute time frame with me, and you're going to see as we look at the hourly candle chart and the rally that we saw off earnings back in November, a similar pattern, right? You've got bottom left corner to top right. You've got areas of consolidation that have formed at higher and higher levels. On this instance, again, hourly candle charts, you're looking at an area that formed around 76 into the middle of November prior to the rally up to that $94 level. But you can also see how after we came off, it's been mostly just chop, and we've been kind of balancing around. You've got an upper extreme 94, lower extreme 84, and right in the middle is that $87 level. So one more step back, I want to show you what's going on. A very similar pattern, right? As we look at a daily candle chart here, kind of adding more time on, but seeing that same depiction, areas of consolidation forming at higher and higher levels. In the daily candle chart, we're looking at 75. So as I mentioned, Mike's not the only one looking for a breakout here. We got a bit of a double top, but still holding above that pivot level, and still all in all very much supportive of a bullish narrative, Alex.
And Mike, as we take a look at the next trade, we're looking at ZIM Shipping Services. This is a name that I don't know is commonplace as a microchipper, of course, Adobe that we're going to get to. What's caught your eye on this particular name, and what are you looking at from a trade standpoint?
Yeah, so this is a global shipping company, and they're based in Israel, so they're obviously going to be they're going to have their pulse on what's going on in the Red Sea area, Suez Canal, all that stuff. So the fundamentals, because of the disruptions that we're seeing in these and alternate routes that are needed to be taken, that shipping costs are going up. That means that their margins are going to increase. So at the very least, the fundamental story behind it is going to align with the technical story, which it's holding its 200-day moving average. And so that's really where I'm trying to get in, and it's held that before that had actually happened, before all this stuff in the Red Sea actually happened, and there's plenty of room to the upside. You can look at, if you don't like ZIM, SBLK is another one that looks pretty darn similar to it, but I went with ZIM.
And it looks like you're looking at a call calendar to the upside here. Why that strategy selection?
Because of the implied volatilities are extremely high and in backwardation. And so I'm trying to take advantage instead of just a straight call spread, which you could do. You could do something like the 14-17 call spread or something like that going out into February or late February. But with the disparity between the short-term implied volatility and the long-term, and if we rally, it's going to be a strong rally. It's not going to be a rally where implied vol gets killed, because really the scare on that is to the upside, yet you still have that decaying option that you've sold against the long one that you bought.
Makes a ton of sense. Appreciate that. Ben, talk to us about the technicals, because it's been a stock that's been on a very, very impressive rally the last few months.
Yeah, the last few months, but that's coming off of a massive downtrend that we had, seeing the stocks really just starting to recover. 15 is going to be a key area on the bigger picture. Let's jump into the more granular first and foremost. I want to show you what's going on, because right now we're kind of range bound, not a lot of conviction one way or the other, just pivoting around this 1350 level. You've got an upper extreme 1524, a lower extreme, the lows we saw earlier this week around 1160. But again, not a lot of conviction, right? Sideways, just overlapping and rotational. So I would say, when in doubt, zoom out. And you're going to see, as Alex mentioned, there has been some strength as of recent here. Taking a look at the 60-minute candle chart, I want to show you, my eye was drawn to, well, 3 areas of consolidation, because it was just in the end of November, beginning of December of last year, we were trading around $6, $7. You can see well-defined trend higher all the way up to 15. Now that's going to be a key area. Why do I say? Take a look at the longer-term chart. Here we are. If you remember, we were up around 91, 92 back in the spring of 2022, all the way down to that $6 level. So this move up that we just looked at on that hourly candle chart is just a small blip on the radar, but it is significant, Alex, because on the way down, just like on the way up on that hourly candle chart, well, you can see areas of value that have formed to help us establish that trend. But now look, as we were balancing around 10, we were referencing 15, the area prior to the one that we're currently in. And if we take out 15 with conviction, ultimately you invalidate that working assumption that we're trending lower. So this is a potential bottoming pattern playing out here on the bigger picture. Mike mentioned the 200-day moving average. I wanted to show you where it is real quick, because we did get above it. We're teetering around it right now, but we've been above the 50 since the end of December of last year. So yeah, there's some strength here, but still some heavy lifting to be done above that $15 level.
Yeah, one to keep our eyes on for sure. Certainly an interesting company, especially given where it is in the world and all that's going on. Mike, last trade though, do we go 3 for 3 to the bull side or something a little bit different for Adobe?
This one's a little bit different, which I am bullish on Adobe, but it can't get over that 50-day moving average. And given kind of where we are, you know, the push and pull tug of war that we have right now, and it can't get over its 50, I'm still bullish. So I'm not just going, I have no interest in just shorting it. I think that it's in a wait and see pattern. So I'm going to approach this with an iron condor approach. And just for next week. So this is, you know, just got to kind of sit and stay for about the next week and a half.
Yeah, and I see that we have it up on the screen, the risk profile, neutral strategy. And as you said, this, I think it's a great conversation where you talk about maybe a longer term, maybe bullish posture that you may want to prefer. But in the near term, you see that bit of a tug of war and seeking to take advantage of that with this strategy.
Exactly. Yeah, and in this case, you know, where I'm looking to sell the 570, 80, 605, 615. So you're selling the 605, 615 call spread. You're selling the 575, 80 put spread, and you're able to collect $4 for that. Each are $10 wide. And so you could potentially lose $10 on your option, but you have the $4 in there. So you could potentially net lose $6. So you're laying 1.5 to 1, and only for the next week and a day.
Yeah, in a pretty wide window, break evens theoretically at expiration, 576 and 609. So for that relatively short-term time horizon, one could say that's a fairly wide window to be profitable on this. But Ben, talk to us about the technicals on Adobe. Many see as a best-in-class sort of design software company.
Yeah, I think the chart's a reflection of that as well, Alex. Longer term trend up, but we are starting to see the stock roll over with the broader market weakness we've seen. Dive into a 5-minute candle chart with me. You can see as we go back to the beginning of the week, areas of consolidation that formed at higher and higher levels. But again, while we're forming one, you're always referencing the prior area. And you can see as we pull back here, 587 is going to be significant. Anything below that really starts to get into that gray area and sort of raises some concerns for the short-term bulls, that's for sure. Take a step back with me from the 5-minute candle chart. Here's the move that we just looked at. You can see it kind of is just getting us back into the middle of the range that we've been in as you go all the way back to the beginning of November when we spiked up and through 560, 570. But you can see again, this is overlapping, rotational, kind of random consolidation after a big run-up we saw into the end of October, beginning of November. Another step back away from the hourly candle chart shows the daily candles, and all of this, again, very supportive of this longer-term trend up. A little bit of short-term weakness, that's for sure, but here you can see areas of balance that have formed at higher and higher levels. You got price going all the way back to October of 2022 and currently balancing just below that $600 level, so a significant area to keep an eye on. I wanted to show you what's going on with the 50-day moving average because Mike referenced that as well, and here you can see we're just below it right now. So well above the 200, that longer dated, the orange line, but that shorter dated here, we're kind of trying to, or teetering right around it as we have been in a bit of a grind higher, more so sideways than not as of recent though.
Ben Lichtenstein, Mike Shorr of Prosper Trading Academy. Appreciate it from both of you gentlemen. Have a great rest of your day, and thanks for joining us here on Trading 360.